All right, everyone, welcome to week 17 of Selling Weekly Lottos. Every week, I sell what's the equivalent of lottery tickets in the stock market to gamblers, and that's how I make passive income. Hey, we made it to 4 months. I just want to thank everyone who's been following along. It really means a lot to me that you've been watching. All right, start with the disclaimers real quick. Number one, all my positions are covered with cash and shares. I don't use margin. I don't sell naked calls and naked puts. That can get really risky, which brings me to my second point. I'm totally cool with getting assigned. If my puts get assigned and I have to buy the shares, or if my calls get assigned and I have to sell the shares, totally cool with it. That's why I write the contracts. And then number three, this is not free money, guys. So this is risky. Every day it's investing, right? Every day you invest, you take the chance of getting blown up. All right, just imagine aliens take over, aliens from outer space, and your account goes to zero tomorrow. Okay, so that's the risk with investing. All right, that being said, the winner this week is both of us. The rare everyone wins week. All right, I made $1,458 using $121,500. That's a 1.2% yield. And the gambler actually won this week too. They made about $600 using $1,100 or so. All right, I'll tell you about that a little bit later. Let's take a look at my positions. Boom! All right. Take two, 250 calls. Sold two of those for almost for $600, and those were assigned. That's the one the gambler won. All right, we'll talk about that more when I show you the charts. And then, bazam! Meta, okay, Meta 725 call. Sold that for $500. I bought that back for $90 for about a $410 profit. All right. Let's before we take a look at the charts, I just want to tell you, whenever I'm selling covered calls, my ideal situation is for the stock to go slightly up, right? Slow enough where it goes up, but makes the covered calls go down because it's not going up fast enough. So I win on both, all right? So let's take a look at the charts and see what happened. Kapow! All right, so like I say, since I've been showing these charts, this blue line, it's not technical analysis, it's just a trajectory. It's where I sold the contract and where the contract expires. Above that line, and I'll lose my shares, but I'll get maximum gain. Below that line, I'll keep my shares, but I'll get a profit on the covered call, all right? So this closer one to me, you'll see take two. All right. Both these stocks had weakness, right? So before I talk about take two, just want to tell you my thought process of why I chose to sell the covered calls here. So both these stocks had weakness, right? They were dipping. They bottomed out and then they recovered and they stabilized. So once it stabilizes, that's where I'm more comfortable getting in. So I bought the shares and I sold the covered calls. And as you can see, I sold the covered calls. If you put a horizontal line, I sold the covered calls where the break-even price is right where they started their dip. And I'm thinking these can go up, but they'll have a hard time crossing that resistance. All right. So you can see take two here is I got totally blown out. I sold the bottom of those. I sold them for less than $300 each. Few hours later, they were already $1,200. So congratulations, gambler, for winning those, okay? I still made maximum profit, all right? And then the Meta, all right, that was slowly following the line right up until the last day where it dipped again. I was able to take profits on the covered calls and immediately sold for the next week as well, all right? So the reason I sold another reason I sold those covered calls there is because of implied volatility. So when the stock dips really fast, the covered calls are still gonna be priced higher. They're still gonna have a premium because the market is pricing in, it is factoring in the chance that the stock will bounce. And that's probably because we're in a bull market. So it's just thinking the stocks will just bounce and go back, right? So the calls were priced higher still. And that's why I sold them, because if the stock stays stable or just goes slowly up, you're going to get what's called implied volatility crush. And that's a really important thing to know in this strategy, this theta gain, this option selling strategy. Implied volatility crush is your best friend, right? Another thing I want to talk about is losing covered calls, okay? From what I notice with this, when you talk about this strategy with other investors, a lot of people don't like this strategy because, not because of the chance of losses, but because you're getting a maximum gain, you're capping your gain. So people don't like the idea of not making as much as you could. And that's a total fallacy to me. Like, for me personally, I don't consider the loss, like the losing the chance to make more money, to be the same as losing actual money. So the way I interpret it, the way I see it, is losing covered calls is actually winning. All right. Let's take a look at my benchmarks really quick. All right. Bazam! All right. Let's just talk about the important ones. All right. Total income right now is almost $24,500. I'm about 3 Chipotle burritos away. All right. With guac, by the way. All right. The total yield right now is 19.62%. All right. And that's actually beating the market over the last 4 months. I started this on June 9th, 2025. All right. Since then, S&P 500 is only up 11.5%, and NASDAQ is up 13.5%. So typically people say that this strategy won't win in a bull run. So pretty interesting to me to see that the percentage gain is higher in a bull run, which is pretty nice, okay? Let's skip all the averages. So right now the averages are pumped up still because I haven't really lost. Any loss, even 1 week I lose, all these averages are going to come crashing down. So I don't want to talk about all the making $1,400 a week and potentially making $75,000 a year and 60% estimated annual percentage yield. One loss, those are going to come crashing down. All right, but I did add some new ones. The main new one I want to focus on is this call put ratio here. So in the first half of this series, I was selling more puts, right? And lately, I've been trying to balance that by selling more calls. So my call put ratio has achieved parity of 1, where I'm selling the equivalent amount of unique calls and unique puts, all right? And then the assignment rate right here is, I got 6 out of 38 contracts that I've sold, unique contracts. 6 of them have been assigned and 5 of them have been covered calls. So yeah, just added those because I want to keep track of my different types of contracts. So that's basically it. So yeah, anyway, thanks for watching. Feel free to ask any questions in the comments, and see you next time. Peace.